फिस्कल डेफिसिट गवर्नमेंट की फाइनेंशियल हेल्थ का एक इंपॉर्टेंट इंडिकेटर है. अ फिस्कल डेफिसिट अकर्स व्हेन अ गवर्नमेंट्स टोटल एक्सपेंडिचर exceeds its total revenue minus the borrowings. We have with us Tirthankar Patnaik, Chief Economist, the National Stock Exchange of India. Welcome, Tirthankar.
Hi, Milan.
So, Tirthankar, can you elaborate on the fiscal deficit targets outlined in the interim budget and the strategies planned to achieve them?
So, first of all, thank you for having me, Milan. It's a pleasure to speak today. And the planned fiscal deficit for FY24 was 5.9% of GDP. And in an era of slowing growth, it was widely expected that it will be difficult to achieve this number for the government. And there will be some or even more fiscal slippage. So street expectations ranged from 6% to slightly higher than 6% on a fiscal deficit number. However, we heard from the Honorable Finance Minister today that the revised expenditure for FY24 would have a fiscal deficit of 5.8%. So that was a very pleasant surprise for the market. Clearly, having a 10 basis point shave on fiscal deficit in these circumstances is something that the market was not expecting, and that is definitely a good news. What is, however, more interesting is that for the next year, the fiscal deficit has been estimated at 5.1% of GDP. And importantly, this is kept with a nominal growth of about 10.5%, nominal GDP growth of 10.5%. So these numbers are fairly realistic in terms of a fiscal math, if you see. And going forward, even beyond FY25, there is a plan of fiscal consolidation which looks at having a 4.5% or sub 4.5% fiscal deficit by FY26. So one sees a very clear downward trajectory in the fiscal math here, which is very good news. And this is particularly interesting given that the Indian economy is coming out of the pandemic. Major economies all over the world have seen their fiscal calculations go awry because of the fiscal expansion and the impulse that they provided. And many of these economies are facing difficulties because of the rising interest rate environment. So they have borrowed on one side, they've spent on one side, and now they have to repay at much higher rates. So in that scenario, India's fiscal trajectory of 5.8, 5.1, 4.5 is a very, very positive move. On one other positive for that was for the coming year, the borrowing target has been kept at slightly north of 14 trillion rupees, 14 lakh crores. The market expectations were something like 15.1 or 15 lakh crores. So that's a definite positive again. So no wonder markets took it positive. The bond markets, the 10-year went down by 15 odd basis points today. So clearly, very positive on the fiscal front.
How does the interim budget address the balance between fiscal consolidation on one side and the need to stimulate the economic growth on the other?
So very clearly, growth in the economy is in the last several years been taken up by the government through Capex. You see consumption growth is still stalling at roughly 3% today in our GDP numbers, while overall growth is around 7%. So for the coming year, growth is expected at 7.3% in real terms. How does the government stimulate growth? The government's composition of expenditure has been steadily moving towards capital expenditure, more and more capital expenditure. So, over the last 8 to 10 years, capital expenditure as a ratio, as a share of overall expenditure has risen from around 10% levels to 22%. And that 22% was FY24, which had an overall Capex number of about 10 lakh crores. Now, that number again, in a pre-election year when one typically sees revenue expenditure go up and not capital expenditure, that capital expenditure has been increased further to 11.11 lakh crores. So this translates to about nearly 24% of the expenditure. Nearly 1/4 of the government's expenditure today is Capex. This basically tells you where the focal point of the government is, what is it that they want to do in terms of their expenditure from a budget perspective. And the results are also very clear to see. One might also get this question that you know when you have such high capital expenditure, do you really see do you really see that expenditure? In other words, is there a big difference between what is budgeted and what actually happens? In this case, also, it is very heartening to note that the capex spend in FY24, the current fiscal which is going to end, is 9.5 lakh crores versus the 10 lakh crores that was budgeted. So clearly, there is hardly any difference, just about 5% difference between the budgeted and the revised numbers. In other words, the spending has actually been happening. And this is clearly a very positive news for the growth trajectory of the country, particularly from a fiscal impulse perspective.
The interim budget has allocated funds for capital expenditure. Now, how do you assess the impact of these allocations on India's infrastructure development and economic growth?
India's growth or India's infrastructure needs to be seen in the last few years. The number of kilometers that are added by national highways on a daily basis, that number used to be about 10 kilometers per day. Today, it is routinely 35 to 40 kilometers per day in terms of new infrastructure addition. If you look at railways, over 90% of the route kilometers in Indian railways has been electrified. So there's a significant amount of electrification happening. The number of airports has gone up to over 100 in the last few years, and more are being added. It is a testament to how much air travel is expected to rise in India that two of the largest orders on planes, aircraft ever, are Indian orders. So, that is how much Indian aviation is likely to grow or is anticipated to grow over the next decade or so. In terms of infrastructure at a local level, in our own city at Mumbai, there is a $30 billion infrastructure plan that's currently going on. One part of it is the Atal Setu, there is the metro and so forth. There are various such large projects that are happening. In solar, for instance, the Honorable Prime Minister had said that nearly half of our energy capacity by 2030 needs to be in renewable space. So the capacity addition that India is doing in places like on solar is world beating today. In fact, on that front, in the budget, there was a plan to basically involve households. So basically, there was a plan which said that if you have solar energy production, then up to 300 units will be provided free, and beyond that, energy can be fed back to the grid. This, in our understanding, is a very clear involvement and aim to involve the households in the energy transition of our economy. So significant positives on various sides, thanks to the government's push on what we understand as transport infrastructure.
In the light of the capex trends outlined in the budget, which sectors do you think will be primary beneficiaries and why?
As I was mentioning, transport infrastructure, roads, railways, shipping, aviation, these are, of course, very clear beneficiaries of what the government is doing. But beyond that, housing, and all related sectors. For instance, the PM Awas Yojana has built about 3 crore houses in the last 10 years. And the Honorable Finance Minister said that over the next 5 years, they need to add another 2 crore houses. So with that kind of real estate construction happening, adding to what we have already discussed on transport infrastructure, means that sectors like cement, sectors like steel are all going to benefit from the infrastructure boom that is happening in the economy. And in what one needs to see is the government tries to provide growth as an enabler, growth as an empowerment rather than an entitlement, as was said in the budget speech today. So there are various enablements put in place. There are things that empower people to do business in a better manner. These could be roads, these could be wireless networks, they could be hard infrastructure in other words, or soft infrastructure. The focus on digital public infrastructure has been tremendous. All of us know how UPI has significantly moved up. It is world beating. I think about 12 billion transactions per month, 18 trillion rupees of transaction, 18 lakh crores, and 45%, which is basically 45% of all real-time digital payments in the world today happen in India. So I thought at NSE, itself, it's the world's largest derivative exchange. But even at a country level in UPI, which is we are world beating. So this is part of our focus on infrastructure, frankly. So these are some of the sectors which will do very well in the government's bigger plan.
Thank you, Tirthankar, for breaking down the budget for us.